Hello, my name is Brian Bueller. I'm one of the partners at Triton Pacific Capital Partners, and I'm joined by my partner, co-founder and CEO Craig Fagan at Triton Pacific Capital Partners. Today we're going to talk about private equity. So let's start with, what is private equity, Craig?
Brian, private equity at its essence is an investment in a privately held, non-listed business. But as we all know, private equity is also viewed as an asset class. And the reason why institutional investors have been investing in private equity is because private equity managers fundamentally have a different way of sourcing, structuring, and managing business than public company investors.
So we take it from there, then why is private equity a key component to institutions and endowment style investing?
Institutions realized decades ago that the liquidity premium that they're paying for by investing in the public markets really wasn't serving their constituents well. They're long-term investors, and they realized that for a large segment of their portfolio, they could be long-term investors. And private equity, historically, has outperformed the public markets over any 5, 10, 15, 20, or 25-year period. And that has allowed institutional investors such as Yale, Harvard, other endowments, and pension funds to generate higher returns on that segment of their portfolio.
So Craig, what are the differences between different private equity managers?
Like all businesses, different private equity firms have different levels of expertise. Some firms are focused on much larger companies, for example, companies that might be $500 million a year or more in revenue, where others might be focused on what we call the middle market. They tend to be companies ranging anywhere from $25 million to $500 million. There's also private equity firms, Brian, that have specialization or expertise in certain industries. It could be a segment of our economy, like healthcare. It could be a particular industry, like the restaurant industry.
So we learned about what private equity is and how it's used and the different types of managers. So with regards to private equity, how is it suitable for or used by retail investors?
Until recently, it really just hasn't been accessible. Institutional investors have been investing for decades, hundreds of billions of dollars a year into private equity. But because a lot of the structural and regulatory requirements, private equity has not been broadly accessible to retail investors. Because of the push for access by individual investors, a number of firms out there have launched unique programs and products, oftentimes in a registered format, that allows them to get access to core private equity investing.
So Craig, in summary, if you could walk us through Private Equity 101 to the viewers, what would the high points be?
Private equity is a unique institutional asset class that until recently has not been accessible to individual investors. It's a great way to go and diversify a portfolio, invest in an asset class that historically has had a low correlation to the public markets, and also historically has provided greater returns than you've seen in the public market. So it's a great way. I would almost view it as an alternative to a growth-oriented mutual fund to further diversify individual investors' portfolios in the same way that institutional investors have for decades.
Well, thank you for joining us today. Craig, thank you for also participating and answering some of these high-level private equity questions to introduce this asset class to the ADISA members and real asset advisor members. If you'd like to learn more about private equity or other videos, please go to adisa.org or realassets.advisor.com.